Hello, everybody. This is Alan at Alan Talks FinTech. I wanted to go over some technology stocks with you and talk about some of the growth that I've seen, and maybe it's something you could be thinking about looking at investing in the future. And then take a quick look at my portfolio, which doesn't contain all these stocks, but kind of give you an idea of what's growing and what's not growing. All right, let's take a look at some technology stocks. So I see these stocks quite a bit at work and just watching the internet and stuff like that. So I've been kind of watching them. And what I decided to do was go back to 2012 and go forward every year. So on February 1st or somewhere around that of every year, see what the stock price was and see how much they've gained. Some of the stocks I could go back to 2012. Some of them are newer. That's why you don't see prices and some of the dates. And basically, I was kind of looking for the gain up. So the first gain column on the right is up through February 1st, how much they've gained since I've recorded the price over on the left side, the leftmost side. And then I said, okay, well, since February 1st through July 27th, how much has it gained in about half a year, about 6 months? So let's take a look at some of these stocks. Accenture, which is a consulting company, you can see the gain over since 2012 is about 164%. This year, since February, it's gained 27. The next one, Alteryx. This is a data analytics company in the cloud, and you can see that they've gained quite a bit since 2018. They've done pretty well, gained 149% and gained 72% since February. So that one's a good one. Broadridge Financial, which is a company that handles a lot of the stock market proxy, electronic proxy voting and stuff like that. Stock symbol BR, they've gained 319% since February of 2012. This year they've gone up a little bit, gone up about 30% this year. Now the next one down, Coupa Software. I noticed that one. I was on Fidelity's research website looking at mutual funds and looking at the top gainers of mutual funds, and then you look at their portfolios, top 10 holdings, and Coupa kept showing up a lot. So there must have been a big investment this year in Coupa Software, and as you could see, it made a big gain in about 3 years, gone up 260%, and this year it's gone up 58%. Next one down, Salesforce, been around for quite a while, gained 400% over the since 2012. This year it's only gained about 2%. Next one down, CrowdStrike, recent IPO from a couple months ago. I don't have a lot of data on it, but it is growing up. I did buy that stock in it, and I've made money on it in probably less than a month. Tableau's the next one. Tableau, I remember looking at that back around 2017. It dropped down to $50, but it's been creeping back up, gone up 65% in total. But if you look over the last 3 years, it's about tripled in price. This year so far it's 35%. Then Etsy. Etsy's a kind of a online catalog of people who make clothing and stuff like that. This year they've took a big leap from their IPO price. They've gone up 620%. This year they've gone up 30%. F5 Networks, they basically produce load balancers and networking kind of equipment. Um, they've been growing uh, fairly good, but kind of a lagger in a way, 31% since 2012, and it's gone down a little bit this year. And then F5 or Five9 is a recent company also. They took a big leap um, over the last year, and actually since their IPO, we're at $3.82. They've gone up to $51, so that's 1,200%. But this year they pulled back a little bit, so they're down 6.73. Guidewire, they produce insurance software, and they've been just a kind of a steady climber every year, pretty much 372% since 2012. This year, 15%. They've been kind of bouncing around lately. If you can get them down around $90, that's kind of a good price if you could ever get it. Intuit's been a strong grower over the years. I think one reason for that is they hire really top technical talent, and that talent helps them build some really cool products. Up 270% since 2012, up 32% this year. MongoDB, this one's kind of interesting. I'm not sure why it's so growing so rapidly. It's a recent company. Last year they IPO'd, and already there you can see it right now. It's $158. So they've gained a lot this year. That's another one that was showing up in the top holdings of some of these top mutual funds. Not sure why it's growing so much. It has a niche, kind of a niche product in the cloud space. It has a document style database. So I'm not sure why it's growing, but it's just popular. Then Microsoft, you can see, gained 242% since 2012. This year's up 38%, which is probably mainly on its cloud business, kind of like Amazon. New Relic is a systems management company for monitoring systems. They've gone up 245% since 2015. This year they're down a little bit, and that's just within the last last month. There must have been something in their earnings that sent them down. ServiceNow, this has been a big gainer. They're also kind of in the space of system type software, replacing a lot of HP, Hewlett Packard software in a lot of companies. And you can see that they've gained 689% since 2013. This year they're up 30%. Okta, which is a single sign-on company. I think one of the leaders came from Salesforce. You can see they've made pretty good gains in a couple years. They've gone up 179%. This year up 68%. One of my better holdings. Palo Alto Networks, kind of a specialized networking hardware and software around trying to keep bad people out of your networks. So you can see they're up 304%, only 2.94 this year since February of this year. Proofpoint is another one that's kind of starting to take off. A steady gainer, 755% since 2013. This year up 14%. I think they had good earnings this last week, so they may go up some more. You never know. Roku IPO'd last year. It's gained a lot. So it's gained a lot since February. Now, if you look, see it's gone up 110% since February. Shopify is another very popular one. Big gainer, 624% since 2016. This year up 97%. It's mainly people put their online shopping sites on there. It's kind of competes with Fulfilled by Amazon, the Amazon kind of shopping. Splunk. Splunk is a way to capture data in all your log files and other types of files and present it in a nice kind of dashboard report style report. They've done fairly well, 275%. This year, only up 10%. Square is one of my favorites. I bought it originally down in the $14 range. Bought it, sold it, bought it, sold it. Right now, it's at 81. You can see it gained 708% since they IPO'd. This year, up 15%. It's bounced around a lot. Square, PayPal, stuff like that. You know, they're kind of financial processing software companies. Atlassian, another growing company. They produce software development tools, and they're starting to get more popular. A lot of companies are converting to their software packages, and you can see it's gone up 47% this year. Twilio's another one around messaging, sending messages. They're up 32% this year. Upland Software, which I don't know a lot about, but they've gained a lot, 290% since 2015, and 50% this year. And then VMware, a lot of companies use VMware to run virtual machines on their server hardware. It's used a lot. They've been kind of up and down price wise, as you can see, up 18% this year. Workday is another software package. It's an HR type of software package. A lot of companies are switching from PeopleSoft to Workday, and you can see they're kind of a steady gainer, especially in the last couple of years. And then this year they're up 16%. And then a recent IPO, Slack. You might want to check it out. We'll see how it competes with Microsoft, Skype, and things like that. All right, so I wanted to show you my portfolio. So my strategy at the beginning of January 2019 was to buy a bunch of dividend stocks, and originally I bought some that paid in the anywhere from 2% up to about 6% yield, and then a little bit later I'm like, well, I'd like to get 10% yield, so then I bought some higher dividend yielding stocks. So I just kind of wanted to show you how well they've done. And recently I'm gonna also buy some growth stocks, and some of them are these technology stocks that we mentioned. So I just want to kind of go over some of these with you, and I sorted them by how much they've gained this year. So my top gainer this year is Okta, OKTA. This is a single sign-on cloud company. Since I bought it, it's up 65%. Interesting, the next one down is General Mills, which I bought it at the beginning of the year for its dividend, and it's gone up, 36, almost 37%. The next one on my list is Microsoft, and that one earlier this year was kind of bouncing around the $90-$100 range, and then in the last couple months it's gone up a lot, so I've gained 31% on that one. And then McDonald's, another dividend stock, kind of on the low side on the dividends, and I did pretty good on that one. I'm up 31%, keeps going up. Same with Apple, up 25% since I bought it. And then Coke gone up 20%. Square, which has been bouncing around a lot, up 20%. Broadridge Financial, that was another one early this year. It got down into like 95. I bought it around 114, and so it's gone up past the 114 mark, and so now I'm up 17%. AT&T I bought at the beginning of the year as a dividend stock around $27 or something. So it hasn't gained a lot in price, but it's up 17%. Main Street Capital, another dividend stock, up 10%. Prospect Capital, high dividend BDC, business development company, around a 10% dividend. I bought it at a really good price in the low $6 range. Earlier this year, you could have bought it, around $5.80, and so you would have done well on it. And it pays a monthly dividend. I wish I'd bought more of it at the cheaper price, but if it gets down in around $6 even, that's a good price to buy it at. Then Innisbridge, which is a Canadian kind of gas pipeline kind of company, up 9%. Altria, that one's been kind of bouncing around 8%. Horizon Technology, which is a BDC that specializes in technology, only up 5%. Valero has gone up, has gone down. Recently it was down around $70. Would have been a good buy at that price. Exxon's another one that bounces around. If it gets around $66, $68, that's one to buy. HTGC had a little bit of controversy around its CEO and the college bribe scandal. It's gone up a little bit. Stone, this is one of those companies that Warren Buffett owns. It's a Brazilian company, financial transaction processing. They have machines that go into small businesses, point of sale transactions. Only up 2% for me right now, but I expect it to go up a lot this year and next year and beyond. BP Oil, any of the oil companies, you have to buy them low because they bounce around a lot. They pay around a 4, 5, 6% dividend. So they're mainly dividend stocks. So that's one thing I wanted to point out was a lot of these dividend paying companies don't move a lot. And so the oil companies are one example of that. Whitehorse Financial, another high dividend stock. I probably bought around May or April. Hasn't done much. Now, over on the right side, I have the ones that I've actually lost money on. Royal Dutch Shell, B class. I bought it around 63 something, 64. It's gone down a little bit. This would be one if it's in the high 50s, you would buy it. They pay around 5 or 6% dividend. Don't buy the A class, buy the B class. The A class is taxed, the B class is not, at least for U.S. citizens. AGNC, that one's also down, another REIT type company. Applied Materials, this is one I bought over a year ago in the $51 range, and it went all the way down to the low 30s. And I've been holding it. I have like 1,200 shares of it. And earlier this week, I hit the break-even point, but I wanted to go up a little bit before I sell it. But I plan to sell this company. I'm going to get out of the silicon chip-making companies. SolarWinds, recent IPO, been bouncing around a lot. I don't know, if it gets to $20, I'll probably sell it. MITT, REIT type company, high dividend. You can see that's kind of an example of REITs that kind of tend to go down. So you got to really know what price to buy them at. Arbor Realty is the next one, another one that's gone down, or another REIT company. Again, you got to buy it at the right price. Pins, which is Pinterest. I kind of expected this one to take off, and it really hasn't since it IPO'd this year. So that one's kind of surprising, but I'm going to hang on to it, see what happens. OFS, another investment type company, high dividend. Notice that one's gone down. Mesabi Trust, which is an iron ore shipping company. They're down 11%. Pay a high dividend or high distribution. But that's an example of just because they pay a lot in dividend doesn't mean the price of the stock will go up. AbbVie, another fairly good 6% dividend company. They've gone down a lot because of their local merger with Allergan. And KHC had a bad report, problems with the SEC, so they're down. If they get down around the $26 mark again, that would be one to buy because they will recover. So that's basically my portfolio. I just want to show you what stocks I hold, which ones done well. Usually the technology companies tend to do better because they get a lot more attention, a lot more money goes in it. The dividend and the REITs and the BDCs, although they pay a high dividend, there's no growth in them, and a lot of them actually go down in price, so you have to kind of watch it. And then you also have to watch the IPOs. Sometimes you'll pick a good one and sometimes you'll pick a bad one. So I think the big takeaway from this is you do have to buy some growth stocks. Some of them can be well known like Amazon, but you got to buy them at the right price and they got to be growing. So you got to have some growing companies in your portfolio. You don't just want dividend producing stocks. So just thought I'd share this with you today. If you think this video was helpful to you, please subscribe, click the like button, and leave some comments. Be interested in hear what kind of stocks you have and what kind of mix of dividend versus growth that you have in your portfolio. And then, as always, you can visit my my website, and then I have Twitter, Instagram, Pinterest sites, and the usual affiliate kind of stuff that everybody has. So until next time, see you later.